Hey guys, sorry about being late here. I'm gonna blame it on my children. How's everybody doing today?
Good.
Got a little bit of selling, kinda, an inch. All right, so I think we probably get rolling here. Let me load up my stuff. All right, do you guys want covered call explanations first, or charts and commentary? Okay. Charts and commentary it is. 1 second. All right, you guys should be seeing my trading view here. All right, so right now, this is kind of what we're looking at. As I mentioned before here, just using the Nasdaq. As of right now, this looks like a longer term sort of flat pattern here, and I believe Fed Frog had made some sort of comments about that a couple days ago as well. But so doesn't make the grind any less sucky to sit through. I know there's better terminology for it. Okay, so pretty much what I think we're looking at here, just long term, is the bulls keep trying to break a little bit higher. The volume has kind of I would say like over the last day, and there's been maybe one or two there that you can see over the last couple days since May, where the volume's been pretty much below like what the average is. And that's including some of these different spike days where you see some of these different rejections. And so if we kind of zoom in here, you guys have probably heard this a million times already, but this sort of pattern here is like a ending diagonal, and at least until it isn't. So so right now I think I had some drawings in a prior I want to say it was, 1 second, here we go. So in my regular chart, this is kind of what this ending diagonal looks like. I know I'm jumping around, apologies. All right, so with these sort of patterns, what you can typically see is just this steady sort of back and forth. Now sometimes you guys are aware that we do this this sort of like if-then statement kind of thing, where if the price makes a new high, then most likely it either invalidates the pattern or like it changes the pattern into something else. So with this sort of ending diagonal, I think I also mentioned that this sort of triangles are a means to an end. So technically, I guess you could say that this last fifth wave here, because there's always 5 waves in a like an ending diagonal. Typically, what you'll see here is I think we've already seen the last B wave, and now what we're starting to see here is a bit of a rejection. You can kind of see some higher volume up here, which is a good thing. Markets are a little in excess land here. And when you start to look at it just a little bit closer, we can start to identify some sort of like pullback levels here that I would say sort of confirm, I guess, or like confirm that we're starting to see a pullback. This level here, I would say like right around the 21,700 level. This is where typically like we did see kind of a pierce below this last little high here that had a lot of selling before, and we also dipped down below this last point here, which is this 21,884. So I mean that's good for sellers. I guess what we would have expected to see was sort of like a bounce, where I think I had this on the chart I sent last night. But this sort of bounce move here, that's what I would have expected to see today. But given how it's been such a, I guess, longer term pattern that's been developing, I mean, it doesn't mean it can't happen yet. We very, very well might see some sort of like an ABC like this to head higher up. But, from the selling today, it kind of looked like there's there's either going to be a continuation or it's like the start of some sort of new, some sort of new cycle or new wave, something like that. It wasn't very strong, but it was still present. If you look at what had happened, oh boy, I was looking at that earlier. So if you kind of look at some of the volume here for the day, there's a lot of different, higher volume sort of moves, and bulls trying to catch the knife here, and ultimately, getting sold down. So they're still selling into strength, but I also think now the bulls are starting to realize that it's not just anything but up. So we're starting to see more of these consolidation sort of zones, and possibly a continuation. So now I don't think this is like a 5-wave in development here. I think it's probably more of like an ABC. So we might see something like this overnight, or we see maybe like a higher sort of move. But ultimately, what you really want to look for is this sustained volume. So these sort of little spikes here, these are just little tests to kind of see, what buy support's going to be. But then, once you start to see these sort of like waterfall, what is this? At least a half hour, yeah, probably full hour here, where there's fairly elevated, sell volume, no real news catalyst other than, the pre-market stuff that we've had. So that's kind of the, I guess the pulse on the day here. The last couple of days have just been, creeping higher and higher, and that I do believe is just a, sort of like an after effect of where the patterns are at. And I do think that this is the like final leg up here. So whether it continues up higher, I would say, good levels to set some stops or hedges are at like this 22,117. Well, a little higher, right? So like 22,120 is probably a good level. Then like this, 22,200 level. These are other fib level measurements, but you don't want it to be like too far ahead here. Because you don't want to be left out in the dust, especially if it reverses. So that's if you're being super cautious and don't want to get trapped at the top. If you want to pick a level that's probably more reasonable, for like a long hedge, maybe like a 2250 is probably fine. And I would still probably do the same 50% hedge level, and then for the second piece, probably above that other higher high. So maybe like 2280. Does that make sense, or does that sound ridiculous? So even though it's kind of a tight range, it's still like, if it's going to make a new high, it's, probably going to stay there overnight or something like that until, you get to the morning drive. Bulls, drive it up, and then the bears sell it down.
Hey, James.
Yes.
When you say a long hedge, does that mean you buy the inverse of the short?
Oh, I'm sorry. I meant like the level, like if you have open shorts and you don't have any longs. So this is more of like your sort of protection level here. So when I say, like a long hedge, that's really just adding longs to your existing short positions.
Okay, gotcha. Thank you.
Sorry about that. I was getting a little ahead of myself. So, yeah. So I mean, in concept here, it's sort of the same with the S&P. We need to pick some good levels here where get this stupid hand drawing out of the way. But some of these different levels you can see, like there was a rejection here at this 6067 for the S&P, and then it also kind of sold down below this this trend line here, which wasn't a very strong trend line anyways, but from a technical perspective, it still kind of matters. We didn't see anything yet through this, and this is still a weird looking triangle. This is not really realistic. If I had to say anything, it would probably be one of those expansion sort of patterns here where you might see maybe another day or so where you get something like this, and this is not exactly a complete sort of thing, where this whole pattern kind of changes. But I guess what I guess the major theme here is you don't really know if it's going to continue up or if it's going to continue down. So as we've been trying to practice over the last couple of days and weeks here, is really just manage that upside. So ideally, what would be great is if we could have hedged long, let's say like down here, right? That would have been perfect. Thinking that this is maybe a wave 4, maybe we'd see a higher wave 5. But what's tricky about these is you start to get these like heavy sell events that make these small B waves within the patterns, and that's one of those weird things where it's really difficult to trade it, and it's frustrating because you're thinking, okay, well maybe it's a irregular pattern, right? So you have this like higher high and then it goes lower, and that's maybe your wave 4. But no, so you see a bounce at, let's say a 618 level, that kind of thing, and heads back up. Okay, well then most likely that's your B wave bottom, and then you have another C leg up to go, which it looks like we are definitely seeing here. However, there is still symmetry that is involved with these longer term sort of moves. And I think the Nasdaq probably shows it a little bit better, especially since I have the drawings on it now. But yeah, you can see these sort of patterns here do like this kind of. It's not really a blow off top. It's like it goes above the trend line, but it's only there for like an hour or two, that kind of thing, and then it heads back down. That's where it's like my least favorite trade of all time, just because I've also seen these things reverse right around here, where it did today. It's not considered a reversal per se today, but it's like just a general rejection. And again, with some of the higher volume here, I think that there's bears are at least testing to see if they can get away with starting to sell. Sorry, I moved on a little too fast here. I was going to mention here for hedges. For hedges for the S&P, I'm thinking like 60, 70 is probably a good level for like a 50%. And then maybe like a 60, 80 or something for another 50%, or that at least leaves you enough room here where, if it does make a new high, and it doesn't just reverse right away, you might be able to do that. Or since it is so high, what you could do is you could set just one like 50% hedge here kind of thing. And then if it does, head up, hits your hedge, unfortunately, and kind of pulls back, most likely there'll be some sort of retracement. So you would want to add that other 50% down here, and then most likely you can get out of it when the bulls try to retrace back up. Been able to do that a bunch of times over the past couple of years. It's a little scary when you're still at the top here and you don't really know where it's going to stop, but also where it's going to bounce and head back up. But the market always typically gives second chances. So if you set your limit orders and set them as GTC, that kind of thing, they might trigger in pre-market, they might trigger aftermarket, that kind of thing. So it's just one of those higher risk sort of moments in the market right now where you don't really have a clear direction, because technically speaking, these patterns should be wrapping up, and maybe that's what we saw today was the start. But if it's not the start and we just kind of keep heading back down, more than likely we should see some sort of like I mentioned before, see some sort of like ABC here and then a bounce, and depending on if there's huge volume or not, then that's sort of a signal where you might be able to either add the remainder of your hedge if it was accidentally triggered, or add some small scalper long trades. But the only word of caution I would say with that is if you are going to add longs, make sure that you set some stops at like break even or something if you get some daylight there, because that's just going to be it's high up there, and if we do make some pullbacks, then it's going to be tough to get out of that one, especially if you can rehedge. Does that make sense? Or am I just talking nonsense again?
Again, how sense?
It's going.
Yeah.
Yeah.
I have a question for you. So, given how high we are at the moment, if you had to make a guess, what do you think the chance that we are going to make a new high? And then if it's a wave 5, Obviously, we don't know where it's gonna end, right? It's gonna keep going up.
So yeah, it's a good question. So I guess technically, when you look at these patterns here, this does resemble a pretty solid flat. Sorry, 1 second. Yeah, I don't want to keep pounding the table on the bearish theme, because that's not really what we're seeing. It's like we're just kind of splitting hairs at this point. But you can still see we do have these like higher sell volume spikes at this sort of level. So I guess technically, I think that this is like the end of a C leg and it's kind of wrapping up. But if this ends up being like a 5-wave series, which you could see here, I don't think it's going to like rip up the space, that kind of thing, without some sort of catalyst. Like we did see today that we have the China deal stuff. Even though it's not really a deal, it's like framework that's still not really a deal. But I think what people have seen here, like for example, if I pull up like core inflation, and I also think this is kind of why the yield is down here, is that we're starting to see big dips, and big dips typically mean people are spending less and people are lowering prices. I mean, I don't know about you guys, but I've seen auto sales like $10,000 off MSRP, that kind of stuff. I've also seen some we're trying to sell our house here in Tucson, and I've been noticing that there's a lot of people that have been lowering their prices. Where I live in a military neighborhood, so these houses flip pretty quick, and
Sure.
You've been seeing a lot of those. So that's why I don't think if we do have a new high, that kind of thing, it's not going to continue to go up to the moon unless we have like a blow off top sort of situation, which is even scarier. So I guess a good way to prepare for that is just to try to measure what we have. So typically, if you see like a wave 5, the first thing we want to do is measure like your peak to trough for your wave 1, and this would it would still sort of qualify as like an irregular type of pattern. I think I have it for Bitcoin, but sorry, what did I do here? Okay, sorry. I thought I had the chart, but I don't. I'll send it. I'll send it later. I'll just push it out to the group. But I mean, this doesn't really look like a wave 5 to me. The wave 3 isn't very strong. So if you were to draw this out and say, all right, so we got a wave 1, 2, and this would be like the end of 3, and then you would still have some sort of pullback here before you would have some sort of longer wave 5. Now, just because it has been such a crazy run here, you might only see like a pullback to, let's say, like the 200 daily moving average, like this 5834 or 5800 sort of range.
Right.
But that's at least kind of what I think we might see with that. And if we don't make a new high yet, and we do see a larger retreat, then I really don't think it's wave 3 and 4. I think it's more of a like it just doesn't have enough strength to make a new high yet. You're starting to see a lot more sell delta above here. So I guess the long story short is take out some of this junk here. You'll still see some sort of like deeper wave 4 kind of thing like this if we do have like a pullback. And that's, I think, where it's the bears' game to lose at that point. If you zoom out, we have this longer term trend line, which is pretty important. We will get a bounce here. And sorry, what was that? Oh, sorry, I thought I overheard something. So if we do see something like this, we will have a bounce. And I think that the target there is like this 5630 level, where we can see a legitimate wave 4 pullback, or we could see the start of a new wave 5, because that really wouldn't invalidate any of the rules if we would have this wave 2 top here, or sorry, wave 1. So I guess to kind of model that out, you could see something like this. Bears could trick everybody by selling it down for a couple points here below the trend line. But if the trend line holds, then yeah, I mean, you could definitely see a new high after that. But so I guess the the two scenarios here that I'm kind of kicking around is, one, if we do make a new high in this current run, then that kind of shows a little bit more strength than I'm assuming at the moment. I still think it's a little weak with the volume, even though bulls keep trying to do squeezes. There's definitely some buyer exhaustion there. I've had 3 DeMark indicators fire in the last couple of days for buyer exhaustion. And even though you do see decent volume of the bulls trying to keep it up, I think that they're just kind of running out of steam here, and pullbacks are healthy, right? So I mean, even if we get a couple percent, that's still gonna give the opportunity to trade some volatility. So for the UVIX trade, it should definitely be able to, or definitely be in profit with that. With the some of the other trades, we at least could be able to hedge up, because this is actually kind of right around where I had removed some of the long hedges I had way too early, unfortunately.
Yeah.
But hey, it is what it is. So hopefully that helps and that answers your question.
Yeah. Thanks. Yeah, perfect.
The second scenario is this. Sorry, and I'll also send you I'll post it to the channel, the types of flats, but you can also see a C leg kind of reach up like this, and you'll see it on my Bitcoin chart if you have the link for it. But you can see a long C leg here, but you don't typically really see that after a major shock. I mean, there was a lot of volume, and kind of like we talked about I want to say 2 weeks ago now. V-shaped recovery is not typical, or it's not typical of normal market functions, and part of the reason is because if it's a wave 2 or B wave, that kind of thing, you get a lot of this sentiment behind it that's saying, oh, new normal, and or not new normal, oh, we're headed back to normal here, we're getting back in, everybody's buying this dip, and then it ends up being a slower grind all the way up. So even though it has been pretty crazy, I still don't think it has enough of the power behind it, where we saw after the Japanese yen carry trade blow up, where you had this normal give and take sort of pullback rally, and here you haven't really seen it. You've just seen a straight drive. So this is, in my opinion, a lot more healthy of a rally, and a lot more solid, tradable. I don't feel bad saying that it's going to continue higher. But when you see the V shapes, it kind of means that either there's lots of people trapped and they're trying to juice the market to get out, or there's the dealers are trapped in a lot of different opposing positions. If you remember, the VIX was super high and the dealers had to take the opposite positions, so that can typically drive reversals with the V shape.
On the daily chart, if you were to look at that long run, could that be a wave 3, and then what we saw early April could be a wave 4?
Not necessarily here. Let me. So there's some overlap here, and that's what the important part is. So before, when we were climbing up here, we had this pullback, back in April of 24, but it didn't necessarily break this prior high here that we had back in November of 21. But now that we've had this sort of break here, that's where I'm kind of leaning towards this is a B wave, and there's a C leg down after this.
Right.
And I mean, you could say this whole thing up here is already a complete 5 wave. We have a pretty clear 5 waves up at top here, and this could be a very very quick wave 4, as this could be your wave 2, because it's kind of lazy, or just making a flag. So just from a charting perspective, this does kind of look like a 5 wave series up already, with another 5 here. So that's kind of why I'm not freaking out, if that makes sense. I probably should be. But another thing too is that I think we're also on the cusp of making like a Head and Shoulders. It's just this one little wave has gone a little higher than people expect. So with this sort of pattern here, you could make the case here that this is like a double top, and then this is or a double top that kind of starts the correction. Then you have this like right shoulder here, and anytime you do break this sort of neckline here and that gets bought up, it doesn't typically reverse this high, but it really hasn't been doing it for long. I mean, we're only talking since really, since May 19th, so a couple weeks, like 2 weeks, 2-3 weeks. And that's typical for like ending patterns, ending diagonals. Does that make sense?
Yeah, thanks. Perfect.
So there's just a couple of, to reiterate, there's just a couple of things that are, looking more bearish than bullish. And, sometimes like a handful of occasions, these sort of, like the patterns and stuff, you think it's one thing and then it kind of changes into another, longer term. But I guess from what I can see right now, even if there was a new high that was made, it could still be constituted as like a irregular sort of correction, at least from like a technical analysis standpoint. I don't want that to be the only leg to stand on, right? Because there's sentiment, there's strength, that kind of thing. I mean, if you're looking at the RSI, down here, here I'll turn off the money flow. I mean, it's still elevated, and it was still overbought as of yesterday, and now it's still really close to being overbought. So with that being said, there's just enough. There's just a couple little things that are pointing towards too much, too fast. There's still a lot of uncertainty out there. So let's take it day by day, that kind of thing. So just in general with equities, you just being careful is important here, because you really don't want to be stuck at the top. And if we end up making a new high, I'm just worried that the bears have been punished so bad that they're that they're going to make it hurt on the way down. So yeah. Any questions about like equities and some of the drivers behind that? If you have bullish thoughts, please let me know. I'm happy to talk through that. Okay. All right. For equities, hang in there, guys. If you're short, everybody shorts too early. If you're in a super bull, you always stay to the party too late. Never fails. So, try not to beat yourself up over bad trades made or too early, something like that. It always typically goes a little higher than you think. So, stay the course and manage that upside risk, and you should be all right. Just to cover real quick the Dow. The Dow is looking a little. Certainly not as energetic as the Nasdaq. You know what? I don't like this chart. I'm not using the main charts I have here, but so that, and then also if you look at my small caps chart, it's right at the I want to say it's right at the bull target 1. So that's kind of what's going on with those guys. 10-year yield. Oh man, sorry. Let me grab another chart. Can't click fast enough today. Okay, here we go. All right. 10-year. I think that's it. All right. There we go. So this is what I meant by the small caps, small caps chart. It went all the way up here and hit that. This looks like a pretty perfect Head and Shoulders to me. I don't know about you guys, but small caps, they don't really lead, but like all ships kind of rise and fall with the tide. So if small caps had a hard time even getting back up to this, 61.8 level, and the Dow, it's pretty close to its, to its 786, but hasn't really quite hit it yet. Might not. So now let's take a look at the yields. So I'm starting to get a little, I don't want to say concerned, but we had this sort of pattern drawn out here, and since we saw, inflation's kind of coming down here, it's kind of throwing a little bit of water here on the narrative of higher yields. But even if there's just a small little break, kind of, I guess, like unemployment is going to be one of those things too that drives it, because even if you like lower the rates, you're not going to get a bump in unemployment or a kick down in unemployment for some time. So I guess what I'm trying to think here is like, are we going to see one of these just quick moves down, and then like to kind of test like the different moving averages, or has that pretty much wrapped up, and are we now looking at this just a wave 2 and a much larger sort of move up? It's the TMV trade is still in profit. It's a larger unit size, about four units. So I don't really, I don't think the yields are going to plummet, if that makes any sense, or not sense, but I don't think the yields are going to plummet. I just think that they're going to be probably a little, just kind of consolidating for a bit. So that's, kind of what's going on with the yield. Gold's been a little weird. It's possible, Tim had mentioned this before too. It's possible that gold is actually getting to some sort of correction that's got some weight behind it. And I'll show you what that might look like on the left-hand side. So we might be seeing something like this, where it might not get up to that next target. It might just make this kind of weird little pattern here, but it's still like a flag, if that makes sense. So what you really want to look for is this trend line. And so a couple days ago, I was getting a little nervous, but it seems to have bounced on the trend line here. We're starting to get some more decent volume. So I think maybe we might see like a truncated sort of C leg if it doesn't start to jump up quickly. Maybe this turns into some sort of ending pattern here, but yeah, I just don't know if it's going to be the right time to stay long and strong with gold. So I think it will go back up a little bit here, and we'll probably hit this bull target 1, like the 786 level at around like 34.56. But after that, we might have a C leg down, which takes the shape of this like five wave thing, or what I'm thinking here is we might see another flat where it just pulls us up. I mean, I'm hoping for the flat because we can make some nice money on some of those the long miners that we have, and then also that the gold option spread. But yeah, I just things are kind of changing quickly, and I just want to make sure we're not trapped and having to hold something for a couple months. So it's sort of like oil was. If we go to oil, like oil has just been screaming now, and that's great. But and at this rate, I still think it's going to go up a little bit higher. But is that going to be enough to be able to get out of the long position? Not sure yet. So that one's been that one's had a little bit of I guess I think we had the long position right around here, and then it just got sold down like crazy, like everything else, and we just kind of got trapped. That happens. So it's been, we've been patient for a while, and now we've had a, I'd say pretty decent retrace. So if you are trapped in long oil, you'll probably get an opportunity here to offload, and I'll probably be doing the same here. But what else I'm going to do after we see some sort of topping is I'm going to add another unit to the short oil position, just because it's actually, it's not that far underwater. It's pretty close. So by adding another unit, that'll improve that delta. Any questions about like gold and oil at all? All right, flipping to gas. So natural gas here. I still have a box around this consolidation zone. Probably what you want to watch here is anything below this white line. So it hit the bear target, which probably should have been around here. But anything really below that, you might want to consider a hedge, just in case it does, like it makes like a triangle, I guess you could say, like one of these. where you'll just see it get a little bit lower and kind of consolidate more. So instead of seeing something like this, it might just take a longer time, where you have patterns sort of like this. So I mean, in this situation, I think it's probably more of like a continuation pattern. There is the possibility that you could see, instead of that, might see something where it continues to go back down and test this trend line. However, I think that again, symmetry plays an important part with these things. And if you do this for your day job, you're not really in a rush. So that's kind of why I'm thinking we're going to see some more bullishness here, just because again, commodities, it's good trade. You got a lot of people are souring on equities, on bonds too. So commodities and metals and stuff, I feel like they're going to get that tailwind, and also like crypto. So Bitcoin's been going pretty good. But I do think here, if we get lucky enough where this bull target 2 is hit, then I think I'm probably done with the gas trade, at least the long side, for a while here. I mean, you could take a short, but I wouldn't do any more than like 1 or 2 units, that kind of thing. And definitely like ease in if you're gonna do that, because gas does trade like crazy sometimes, but can be profitable with the volatility. All right, so SOX here. This one's a little weird too. So SOX did hit this bull target here, and then we did see a pretty heavy day today. And you can see kind of in the prior days, you didn't really see all that concentration there. Like you saw some selling, but you didn't really see this like constant selling all day today. This is more of like one of those algorithm type of sells where they say, okay, it's time to sell, so that it just keeps selling all day at a constant amount, and the bulls are having to try to catch the knife the whole time. So what I would say for this one is, if you have like SOXL as a hedge, I think I mentioned something about a hedge up or whatever right around like 220 or something like that. You're still probably in profit with it. You might get lucky and have a bit more of a retrace, like maybe tomorrow morning or something for the morning drive. That might be a good time to exit, or you can continue to hold, or like set a stop or break even or something like that if you don't want to give it up. Because I don't really know if this bull target 2 is going to be hit. I think that this is probably a little out of range. Usually you look for these decent, like higher volume rejections, and you're starting to see, just on a daily basis, like as this creeps a little higher towards this point of control, you're starting to see the sell delta start to concentrate here at these levels. So that to me says that semiconductors have probably reached the zenith, I guess you could say, of this current rally. And it's also looking like a 5 wave too. So if you draw this out, so instead of like a C or a C leg, it looks like a 5 wave. That's kind of what I'm thinking. And it might actually end up being something which is just like a regular sort of zigzag. So it might just end up making a pretty long sort of flag, but that might set it up for like a big wave 5 in 2026 or something. Not sure, but for right now, it's become a little extended. You can see the RSI is getting pretty nuts here. So I think overall, like like a SOX test trade is probably not the worst idea. But it might go up a little bit more if you want to wait, that kind of thing. Questions about SOX? Okay, so with Bitcoin, here's kind of what I was talking about before with this regular flat. This is one version. I will send out the other version when this wraps up here about the regular flat. But really, all you just see is this it's kind of like a blow off top sort of thing, and then you see this reversal here with this 5th wave. So I don't know if it's quite done yet. I think you might see maybe another run higher here for this bull target. But we have seen some decent consolidation here, and I think that if equities start to take a turn, then Bitcoin's going to follow as well. But again, my comments about the the inflation, not inflation, the like the safety trade. It has it's sort of showed up in price action. We don't have like confirmation that that's really what's the kind of the cycle change underneath the underneath the surface here. Okay, what else you guys got for questions for normal stuff? Oops. All right. So let me pull up. So I'll pull up some of the quantum stocks here. I'll talk through some of the rationale. Oh man, look at this junk. So sorry. You guys like laugh at me behind the scenes? I mean, you should if you don't.
You should get a laugh track.
That's what I'm saying. I couldn't get it to work last time.
That would be good.
Yeah, I'll see if I can figure it out again. Here we go. It's a better chart. So like it's funny you say that because if you're sharing but you're not sharing your audio with that, but you're sharing your mic audio, it's different. So it's kind of frustrating because like if you hit the button and it doesn't come out of your speakers, like it's kind of gives you that feedback loop. So anyways, so I'll see if I can figure that out. Because yes, I would like a laugh track. I feel like that would help me with my crappy jokes. Okay, so let's take a look at some of these quantum stocks real quick here. I think what we're probably going to see with D-Wave here is this is really looking like a wave 4, so we might see a higher high. But the reason I closed the entire position was because I do think that if we're starting to see a little bit heavier selling here over the last couple of hours here with the session, and on top of that, you can also pick out like a 5-wave move here, and if this ends up being like a C leg instead, like this, because it's still kind of within this megaphone pattern here. If it ends up being this C leg, which it measured out pretty strong here, that's where you could see the start of the next leg down here with this sort of C leg. So this is what I'm kind of thinking that it's a possibility, but I had 3,000 shares and I only had 15 calls that were sold. So yeah, I mean it sucks giving away some of the profits on that, but to net 20-some thousand on that trade as opposed to waiting for, let's say this actually does happen and we get a retreat. Yeah, we could resell the calls and we can keep rolling them out, but it's going to continue to cost more money to roll them higher without any sort of pullback. And the what was it? The QBTS call I think was at like 950 or something, or like 1150, whatever it was. It was like way down here. So the odds of it actually, like the odds of us like having to pay a lot to get it out, that kind of thing, the risk reward really wasn't there. So the idea is going to be, okay, well maybe let's wait for it to dip down, and then we could try both scenarios where we could add some more shares, and then we could also try to sell some puts as it kind of ascends here. So we can kind of try the opposite as it reascends. Part of the problem that we had was that this happened. So it goes up by a crazy amount. That doesn't typically happen a lot. So I mean, you get the good with the bad, right? Yeah, Susan. Yes. Raise your hand.
Hey, hi, Gaines. I have a quick question about the roll that you did. Could you just like roll part of the way down, but just roll out, or not even roll down, just roll out and wait for the drop instead of like closing everything and just keep rolling out, but not rolling down because that'll cost you so much? Yes.
Yeah, absolutely. You could. And that's kind of what, so I rolled up the strikes with QUBT. I think that's actually a good example for that. So what we saw today was, I mean, hey, great. You have the stock, right? Awesome. So, but the problem is, your profits are capped because of because of that. So what ended up costing so much was, instead of this, okay, so sorry, that was the one that was like 1150. You roll it up to 19. I mean, that's, oh, sorry. Wait, what was it? Well, let me look. I want to make sure I'm not talking stupid here real quick. It was, oh yeah, it was 750. Wow. 750 to 19. Yes. Okay. So that's quite the jump in strike. So that, we're going.
I guess what I'm asking is, when a stock makes that kind of move in a very short term, and it's maybe, not really following the chart that you expected, like if you go back to the previous one where it just, kind of got away from you right there. Can you wait for it just to settle and not necessarily close everything out? By rolling out, you're not going to pay that much, but you're going to just wait for the descent? Or do you just see, again, everything in terms of, well, the risk of doing that, it's not worth it. It's not spending that kind of time on that.
So there's it's a very good question. So let me try to walk through the steps. So there's, I would say, at front here, there's really two choices you can make. The first is, so let's assume that our strike was 950. So if it had run away like this, we could, let's say, do a 90-day rollout or something like that. So we buy back the current 950, and then we sell another 950 or a 950 strike 90 days from now. We would have made money on that trade instead of having to pay several thousands, that kind of thing. So you
right,
can
make money, or just even, just to kind of give yourself more time on it.
That's right. Yeah, you could definitely do that, because like I was saying before, if the chart does do this and heads back down, let's say, I mean, realistically, maybe like a month or two, if you had a 90-day call that you sold, you would make all of that back, as long as you were patient enough to hold it and not buy it back.
But you're also, and I'm just trying to understand, you're also trying to capture some of the stock gain, because that kind of really outstripped what you expected?
Yes. So I had 15 calls instead of 30. So I had 3,000 shares, and I had only sold 15 calls on. So I'd only had, I guess, like half of the problem. So those shares had appreciated so much that I was looking at it like, okay, so if I could roll the 15 calls forward and roll the strike up, and I could issue another 15 calls where it's at right now. But that would also mean that I'd have to pay more to roll the strikes up. And then I would also, okay, sorry, I suppose I could have paid for that with the other 15 calls. Okay, you got me. But also too, I wanted to finance the QUBT strike roll up. So it was sort of like I could have done that. I could have rolled QUBT the same strike, and I could have kept that even. I could have sold more calls, like up here with a higher strike for D-Wave. Yeah, absolutely, you could do that. What I was thinking was pretty much just take the stock off the table here because it's made such a good high, and then take some of those profits and reinvest them to a higher strike here. So what the plan is for something like QUBT, because when you see big moves like this, it like your implied volatility jumps, so you'll get more premium for the calls sold. So with moving the strike up here, my hope is that we kind of see this sort of action, and like I would want to try to target these different try to target these little troughs, and then buy back the calls, and then wait for it to kind of ascend a little bit more, and then sell more calls as it goes down like that. So I guess I would say in hindsight, like the proper thing we could have done with QUBTS would be to just sell puts the entire way. It would have been all premium, but you would have owned none of the stock. So you would have still tied up the cash with that. I mean, I guess it doesn't.
Would
really
you
matter.
ever collared it with a purchase put?
Sorry, say that again.
Have you ever collared it with purchase puts to match your sold calls?
I have. It always seems to go poorly for me. Usually in Carnival Cruise. So, but yes, you can absolutely do that. There's the cool thing about covered calls is that there's a lot of different strategies for it. So like, for one stock, you can sell it like I did and then, reset later, or, to like finance another transaction, or you could have bought puts on that stock or like puts on D-Wave here where, if it falls back down, then you can just cash in those puts and then you can either buy more stock and improve your cost basis, or you could sell more calls. It's just and that's sort of like another way to play that wheel strategy where if your shares get assigned, then you just sell a put against it. Like you can even use the same strike, that kind of thing. Did that answer your question?
Yes, it did. Thank you.
Okay, great. So yeah, so the strategy really was just to try to, sell one out because the stock had gone up a lot. And then I also didn't have, I only had like half of the stock that had calls on it. And I kind of thought that that the price might jump up like this. And that's why I didn't really, add all 30 of those calls. And now I'm glad I didn't, right? But still, now that that's kind of said and done and sold, now that we've, essentially purchased the 11.5 points of delta there. Now you've essentially locked in that stock price gain. So so instead of, another thing too, I think I was maybe like $1 underwater on the stock, something like that. And I didn't want to sell it at a loss and then also have to buy the callback at a loss. So one of the things I did with that, oh, I'm sorry, there's a lot of them. It was Carnival Cruise. That's what that happened. I think it was like $1 under. But for QUBT, the intent here is to move the strike up and then continue to sell the calls. In hindsight, of course, selling puts would have been better, but this is still a very viable strategy here where, you sell your calls because, if you sell them at this 19 strike, something like that, and if it drops down to 17 within a week and a half, you'll probably be able to buy that back at 20% of what you sold it. And that's, then you just wait for something else. You pick a strike of like 18 or something the next go around, and you keep kind of lowering those strikes until, you've pulled in a lot more premium with that. So it's sort of like, now that the stocks kind of went bananas, a little bit higher than expected, we still now have to continue to work the strategy here so that it ends up paying off in the long run, as opposed to just paying more money to buy back, positions that had been, just too short, or you know what I mean. The next one here is RGTI. So this guy, I think, is just gonna make another like one of these things. So I'm kind of waiting on this one, at least from like a company perspective. Their earnings were kind of crap. So I guess what I wanted to do was just kind of wait and see what would happen here, because now that the stock went up a little bit, the shares were in, I think I had an extra 500 shares or something like that, that didn't have calls. So that's, part of the calculus behind that. So for RGTI, I'm going to wait until, if it gets down to the bottom of the pattern, then I'm going to, probably sell some puts all the way up on that. But for right now, I'm trying to be a little bit more cautious with some of the stock holdings, just because if we do have a big, correction, that kind of thing, we'll probably have a better opportunity to add some more stock. And I just don't want to, jump the gun on that. So IEP, I haven't done anything with. This one is actually probably a good one to start selling some puts on. It's been consolidating here for quite some time. It doesn't really have a lot of implied volatility. So you actually might, it's probably a better idea, instead of selling puts, the shares are really just held because it's got a monster dividend. So if you don't hold the shares, maybe find something else to sell some puts against, even though it is nice to see this, to see this sort of bottoming going on. You probably won't get a lot of return. There's not a lot of implied volatility right now with this stock. So then with CCL, yes.
So for that IEP one, could you just, again, working with calls and puts, just sell some puts, but then to kind of juice it a little bit more, sell some calls above,
yep.
So that you're kind of improving your income on that position.
Yeah, absolutely.
Okay.
Yep.
I'm just trying, yeah, okay. I don't know how you do things in the really short term, but if I had that as a long-term holding, I think that I'd say, okay, it hasn't really gone anywhere for a while. And even if it broke out, I'm willing to lose the shares. But, you know, the downside from here is not too bad.
Yeah, exactly. Yep. And that's it's great because you can choose whatever side you want, or you can choose both sides.
Right.
Yeah, and I mean, the real, I think the real like compounding factor is holding the shares because of the dividend, but you almost have to do it like in size, and that's kind of where you could be sidetracked with that. Where, you know, like if you have 5,000 shares, like, you know, it's a nice dividend. You know, $500 every quarter.
Yeah, and they will kind of dividend poach you on a sold call. So if that time value on that sold call is less than the amount of the dividend, they'll make you exercise it and grab the dividend. So I've run into that before with kind of longer term. I don't have too many dividend stocks, but that's the one risk with a dividend stock, I think, is that dividend poaching that goes on with.
Yeah, that ex-div date, absolutely. Yeah, and sometimes like the charts will do a lot of you know, a lot of twisting around those ex-div dates, but yeah, you're right. If you're going into something like that while holding a call, or, you know, something like that, yeah, that's definitely a risk. So the other example we had was CCL. This one, I feel like I'm not firing all cylinders today. I only have one cup of coffee today. It's kind of weird. So I was watching this earlier today, and I mean, I just got lucky with this. I think I sold a strike at 24. Yeah, 24. And it was still above it at the time. But basically what I was trying to do is I was trying to wait till closer to the end of the day, just because I saw some selling today. All right. And I was trying to wait for the right place to buy back the call. And then also, you know, because I had a little bit of cash in the account. So like I can still sell more calls. You know, I could still do some, you know, gymnastics with that. So ended up getting lucky by just you know, holding the shares, because I think my cost basis is a little bit higher. But now that I've sold some calls at 24, now we can do the exact same thing as we'd want to do with QUBT. So it's the same sort of stair step down pattern where I think the call's now, like, you know, I mean, maybe it's worth like 60% of what it was when I sold it, you know, today. So that's great. So, you know, if we see something like this, we get a little dip, you know, we can buy that call back. And then once we see a, you know, a retrace, you know, so on and so forth, you know, do something like that. And then, you know, just holding those CCL shares, like, yeah, it's a bigger percentage of the portfolio, because I had that assignment, you know, back a couple months ago, but it's still, you know, still the concept is just using this as an income vehicle. It's not necessarily, you know, holding on to some of these things just because, yeah, I'd been holding on to it because, you know, I like Carnival Cruise, and it's, you know, I think that if we are going to come into a recession sort of thing, they're probably the best cruise line that has the most affordable sort of, you know, thing, but they don't pay dividend. Yeah, I understand. But some of these quantum stocks don't pay dividend either. So it's really, you know, it's a matter of personal preference. But they do have, you know, a decent amount of shares traded and volume and such. So that's the strategy there for, you know, QUBT and CCL. That's why I just rolled those. So now they have higher strikes. You paid for them, but that, you know, it's like selling your starter home for less than what you bought it for. Case in point, happened to me. It's all the money I had. I had to give it away, that kind of thing. And then the next house you buy, you know, the idea is to make the money when you sell the second house, kind of thing, or like make the money back. So even though we had to, you know, buy back the calls, and, you know, it was pretty expensive, you know, I'm thinking we'll be able to make that up in the longer run here, and also too with some of that stock appreciation as well, offsetting that. But that's sort of the concept behind that. Rocket Lab. This one I think has just kind of gotten a little bit too far too fast. You know, even though their balance sheet and stuff is all right, it's still, you know, it still kind of resembles that pattern where it's just getting a little too high. You know, it's good for, or it's going to be time for a pullback here. But I wanted to also, my shares were a little bit more expensive, so I wanted to try to reset those lower. So yeah, I could have held that one, but, you know, I just wanted to reduce some holdings here. So that's pretty much it with all that stuff. Hopefully that makes sense. I know it was a little difficult as I was typing it up. I'm like, oh, this is confusing. Like I'm confused. So hopefully, hopefully you guys were able to at least follow the trades here. I need to put together a better, like a better format for, rolling, because, it's missing the premium from the other couple of rolls that we did. So it's, in profit, maybe not, that kind of thing. Like we're not quite sure because we don't have the whole history with it. And that's what I want to try to, build into the next tool. All right. Questions, comments, concerns? It pretty much does it for the day. All right. Well, I will assume that silence is compliance. Yes, Susan, go ahead.
Yeah, sorry, Gaines. One more question. I was reading your write-up on all the selling of the stock and buying back the calls and stuff, and you were talking about a delta 1-to-1, and if the stock moves one, the options are going to move a buck. And so my question, just generally speaking, is, do you think of that as a really close approximation to shorting the stock? And the delta's 1.
Yeah. Yes.
If you like puts and the delta's -1.
Yeah. Yeah. I didn't really think about it like that, but that's a really good way to do it. So you could.
So you're not borrowing shares or anything like that. But if you really have a sense that things are moving down, you could do it with options. Yeah,
absolutely. So you could, like, for example, you could have, so like Carnival, you could have sold again at the 19 strike. And that would have, I think I looked at it, it was maybe like 450 or something like that per contract or whatever. I mean, it would have been a nice premium sale. But yeah, you can absolutely do that as a hedge. If you have the stock, you can sell some calls, and as it goes down, you can continue to do this sort of, stair step buy and resell sort of strategy for that. Yeah. So instead of, like, if puts scare you, let the other guy, sweat out the time horizon.
Yes. Yeah. Okay. Thank you.
It's actually a really good idea. Now I'm thinking about it. I'm like, huh, okay. Yeah.
Well, again, I always assume that if the delta's 1, that option is going to move with the stock.
Yeah. Yes. So especially if the strike is that far in the money, because, like, if you think about it, like, let's say you buy a call thinking it's going to go to the moon, that kind of thing, when it's right up here. I mean, bad idea, but somebody's going to buy it. And, you just think about it like, okay, well, that delta for that call is like 90 or sorry, like 0.9 or even higher than that. And, that's going to move really fast against them because of how deep in the money it is. And if you sell those deep in the money calls, I would say there is a risk that you could get assigned. Excuse me. There is a risk you could get those shares assigned, but you still get to capture the premium. So you might have a little bit of wastage there between the delta and then also, like, since your stock is, obviously $1 or $1, but if you have a high delta call that you sell, that, that does reduce that risk a lot. Especially if it gets assigned. But if you pick something that's a little bit higher, maybe like sell something that has like an 80 delta or, something like that, where it nets you a lot of premium, that'll if your shares get assigned, you'll probably sacrifice a little bit more profit than you would have liked. So it's just I think it's just a matter of, like, you don't want to sell something that's like at the price of, or strike price of 2. Your shares, and the shares are at 24, because you might make a whole bunch of money on premium, but that's just that intrinsic value that comes with that option.
Right.
It's the extrinsic value where it's dependent on the implied volatility. So if you have, if the stock's going like this, then you can take advantage of that implied volatility for more premium. But yeah.
Okay.
Another thing too, guys, like what I've been doing with my little side 401k account is, like, once, if the market's just kind of grinding and you're holding shorts, like, let's say, SQQQ or SPXS or something, you can sell calls against that as well. So as it continues to, kind of waffle around, I mean, that's what I've been doing. It's been pretty nice. It's just, I didn't want to do it for the fund itself, because there's a lot of, it's just like, it's a lot of communication. It's a lot of, like, you do it quickly, that kind of thing, because it's a leveraged or an inverse, inverse ETF. It could be, it can move pretty fast. So, like, if I have to close trades and stuff like that, it might interfere with some other things, but it's still something that you can definitely keep in your tool belt. All right. Any other questions, comments, concerns? Or else that might do it for the day.
Thank you.
Yeah, all right. Thanks, everybody. Appreciate it. All right. Stick with it, guys. Hopefully we get some good news coming soon.